Okay. So now, so let me finish this process before I give some scenarios. Now we have prepared AR invoice. So the next thing is incoming payments, where we are requesting customer to pay. So if you are preparing the incoming payment, you want to prepare the incoming payment, go to modules, banking, then incoming payments, then you select incoming payments. Now, this incoming payment document, then we choose the customer. This Maxi, we choose the customer. Then, so you're going to display all the invoices against this customer. These are the invoices against the customer. So the one we are concerned of is the one we raised today, which is on the 5th. On the 1st of which one we raised? I think I did something today also. Okay. This is the one we raised today. So we are going to click on this. We are going to select this particular one. This is the one we raised today. Then the next thing is we are going to right click. Two things is either we right click and we select payment means, or we go like this. We click here, this tax bar. These tools on the tax bar. We click on this one. It's payment means, meaning that it's asking us that which means of payment are we making? Is it by check, by bank transfer, credit card, cash? So we can do the payment by any means. So let's assume that the payment is by check, and we can also do the one of anyone. Which one do you want us to do? Can we go on with a check, or which one? Hello?
Hello, sir.
Can you guys hear me? Which
Yes.
payment means should we use? Is it by check or by bank transfer, credit card, or cash?
Let's do bank transfer.
Okay. So if we are using bank transfer, we select the bank. So we choose the bank, we select the bank here from the GL account. So here, bank is already set up in the system. So we double click here. Let's look at the bank we are having the bank. So we have this bank. To select this bank, then transfer dates. Let's say we are transferring the money today. Then the reference, just put a number as reference, 145134. Then here, we click here, we right click here and select copy balance due. So it's showing us the total we are having there. Then we now click OK. So can you see total amount due is 5,880. So before we go, we can decide to check the journal entry preview. So this is journal entry preview. If you see, we have bank account to be debited. We have customer discount for early payment to be 120. This customer account is credited, meaning that reducing customers' liability. So the liability account, the receivable account is credited. So the reason why we are having this customer discount for early payments is because of the fact that if we look at this particular customer, like I explained the other time, let's check the customer. This is the customer code. When the customer is set up, under the payment terms, there is a condition that if the customer pays within
30 days.
within 10 days, the customer will be given 2%, but the payment term actually is 30 days. But if customer is about to pay within, that's 2p10 net 30. If customer is about to pay within 10 days, that customer will be given 2% of the money. That's a discount allowed. We normally call it discount allowed, discount on sales, the way we normally call it in the, I think in higher, higher institution then. So we call it discount allowed. So that's why in the journal entry we're having this customer discount for early payments. So that's the journal entry. So the next thing is we had the documents. So very simple. So now, we have prepared sales quotation, followed by sales order. After the sales order, we did delivery documents, then AR invoice, then incoming payments. Now, though we have not done reconciliation, now, though that one will be for another class. So, but let me now give some scenario. I was saying something then that at the stage of delivery, maybe let's assume that we prepare a delivery document. Let me open a delivery. Let's say this is a fresh delivery document. Let's say we prepare delivery for maybe one of the customers here. We deliver goods to customer. We select the item. Let's say we deliver like 500. This particular customer. Okay. Let me see 20. Sorry. If you notice something here, I inputted 500 first. Can you guys notice something? I now press on tab. If you look at something at the bottom of the screen, can you see something there? Quantity will cause negative stock. Can you see that?
No.
Yes.
Can you see it?
Yes.
Meaning that this particular item I choose, if I assume that I want to deliver 500 on this item, this item we are seeing here, the stock balance is not up to 500. Let's go and check the balance of the, let's go and check the warehouse. How many of this stock we are having in the warehouse? All these warehouse also, they are created also. There is a way we created the warehouse. If you want to check the stock balance, this is where we click on. See this item we're having. We don't have up to 500. And we have different warehouse. We have warehouse 1, warehouse 2. So now, this one now that we are delivering now, maybe we are delivering from warehouse 1, we have 457. So if we choose 500, if we input 500 there, it will not go. That's why it's giving that error that it's giving a negative inventory. So that's why I reduce it to like maybe 20 or something like that. Call me.
Sir, please, I didn't see. Sir, please, I didn't see where we're having that negative inventory.
Okay, let me put it again. Automatically it will show 500. Let's say I put 500. Can you see that? Can you see the bottom side of the screen? Can you see it?
Yes, I can see it now.
Quantity will cause negative stock. You can see, Abby?
Yes.
So the language is an error. So the language and this stock, this quantity you are issuing, you are delivering from, I mean, this item you are delivering 500 from is not up to 500. So you should bring it down to the quantity it can contain. So I now choose 20. You know, we are giving you, there's something, I'm actually going somewhere on this delivery document I'm preparing. So I want to do return. You know, when we are trying to copy to AR invoice, we saw option of return. So I want to apply return on delivery now. That's why I'm just creating this delivery document separately. So let's say this particular customer now we deliver, let's say we deliver, okay, let's say the VAT is 1, that is 20%. Okay, let's say, so I don't be as if every time we are choosing no tax. So now delivery is now, I mean, the quantity is 20. Then let me see the next thing. Let me see if the date is okay, everything is intact. Then let's assume that we now had this delivery document. So we had the documents. You know, the next thing is to prepare the AR invoice. Maybe customer now complain that out of the goods you deliver to us, so 5 of the items are not okay. So now, after the customer like maybe inform of us that maybe the customer inform us that the item is damaged or something like that, maybe say 5 items, instead of us to now copy to before copying to AR invoice, we copy to return. So how many are we returning? Let's say 5. And if we are returning all, so we now put the 5. You know, we all know that the journal entry for under the delivery document, we have the stock account is credited. I believe we are all accountants here, Abby.
Yeah, and cost of sales.
And cost of sales, the cost of sales is debited. Now, they say they return 5 out of the goods we supply to the customer here. So then what we now do is but before we had, let's check the journal entry preview. What is going to be the journal entry preview? Like if we like on this return now, you know, it's going to be the vice versa. I mean, it's going to be the reversal of the delivery. So if we check the journal entry preview now, so raw material returns account is debited. If you notice, this one is a negative. Yes. Yeah. The reason why this thing is a negative is, you know, is a work of accountant. Actually, there is a place we normally set allow negative entry. So we set the system to allow negative entry. If the system is not set to be to allow negative entry, it's going to be the vice versa. This cost of sale will be credited, while the raw material account will be debited with this also amounts. You know, all these things we are debiting and crediting is the cost of the item, not the price. I don't know if you guys get. You know, there's a difference between the cost and the price. The price is the amount you are selling the goods, while the cost is the amount you purchase or the cost of production. How much it costs you to produce an item before you sell it, that's the cost. The amount you are now selling it is price, that's the selling price. So this reversal now, which is return now, is affecting the cost, the item. So it's returning all this item back to the warehouse at the cost, at its cost. So if we now had, we can now add the return. That means out of this item, we return 5 out of the item. Now, if you now go and check the this delivery document, I was supposed to tell you something before, I forgot. Formally, this delivery document is closed because after you issue, after you copy a document to another document, definitely the base document will close. The status will be closed. The reason why this one is still open is because of the 5 we return. Let's see. One of the functions of this taskbar I show you people, I said I talk about base documents and target documents. Let's check this the base document of delivery document, which is sales order. We right click. Okay, yeah, we check the relationship map. Let's check the relationship map instead. Okay, now this documents now, this is relationship map. Let me show you how I get to here back. Like you want to see the movements between the document, we right click and come to relationship map. So if you look at this padlock, it's open. Can you see it? That means can you all see it? So that means the documents, normally we are supposed to deliver 20, but because of the fact that 5 is returned back, so that means we have not completed the delivery. So it's only 15 we deliver there. We return 5. So, and the relationship map is the relationship between this delivery and the return documents. Now, let me show you something. Let's go back to the face there. Okay, let me open this AR invoice. I think this one will contain every other document. Okay, see the movements here. We started from sales quotation, followed by sales order, followed by delivery, followed by AR invoice and incoming payments. This is the movement. This is what is called relationship map. Now, like I wanted to open then, if we right click on this AR invoice, we click on the base document, it's going to show us delivery documents. If we now right click again on this delivery document, click on the base documents, it's going to show us the sales order documents. If we right click also, it's going to show us sales quotation. So base document are the documents that come before the current document, that the document we make reference to before we now prepare the current document. So I think we are fine with how to prepare sales quotation, sales order, delivery, AR invoice, and incoming payments. I believe when you watch the video, you see and how to prepare the what is it called? The return in case of there is a return of goods. So the last thing I will now do is before we go, I want to assume that let's assume that there is a credit note. There is difference between credit note and return. When you have issued an invoice to customer, that's when you now maybe there's a return of goods after you have already raised invoice to customer. In that case, it's not return document you will prepare. They are going to prepare a credit note. But if you have not issued invoice to customer, you have raised delivery notes. In that case, you are going to prepare a return document because invoice has not been issued. I don't know if you get me. If we have the difference between difference between AR credit note, the credit note and the return document is you prepare credit notes when you have already issued invoice to customers, but you prepare return documents when you have not issued invoice but you have delivered to customer. You can prepare, maybe there is a damage or something of the out of the stock you deliver, so you prepare the return documents. But if you have already invoiced the customer before the information get to you, is credit notes you will prepare. So let's now assume that we prepare an invoice to customer and they now discover that some of the items is bad. I will now show you how to prepare the credit notes. Then we still consider the situation whereby the customer supposed to gain discounts, maybe discount of let's say 2% of 10% of 1,000. That's 10% of 1,000 is 100 naira. Now we supposed to raise an invoice to customer for 900 naira because we supposed to raise an invoice for customer for 1,000, but because of the fact that the customer has a discount of 10%, so automatically we supposed to give the customer an invoice of 900 naira, but we now raise the invoice to be 1,000 naira. So later, after we raise the invoice, the customer now notify us that his bill supposed to be 900, not 1,000. So in that case, customer is not returning any item, but just telling us that we are owing him as if we are owing him 100 naira. So in that case, we are going to prepare a credit note without including quantity. The credit note we are going to prepare in that case is not going to affect the quantity because the customer is not returning goods. He's not returning the item. He only complain of maybe overcharge or the discount is supposed to enjoy. So let me give that instance. Let's prepare. Let's do something. Let's say, can we all? Can you hear me? Are you following?
Yes, we understand what you're saying.
Okay. Let's assume we prepare an invoice to customer. So after this one, we end the class for another day. Okay, so let's say we pick a customer. We pick an item. Let's just pick one item. Let's say 200. So this is the invoice we raise for the customer. Normally, okay, let's say, okay, we had the invoice. So this is 36,000 naira. So let's go back to the invoice. 36,000 GPP, sorry. So we select the last data record. Okay, this is the invoice we just raised now. So let's assume that we now discover that maybe after we have already raised the invoice, we discover that customer return maybe two of the item. We have 200 pieces here. So, and the price per unit is 150. So if the customer is returning two items, that means that would be 300. So now, instead of us to now do incoming payment first, what we now do is we now copy this customer and this AR invoice to AR credit note. We want to effect the quantity of the item the customer returned, which is 2. This is AR credit note documents now. So the customer is returning two. Two is 36. I mean, it's 360 naira. Okay. If you remember, sorry, before I move to this place, let's go back to the AR invoice. So before we now copy to AR credit note, if we check now, this AR invoice I prepare now, I did not base, this one is fresh one. I did not base this one on the delivery documents. If you check the journal entry, like I said then, this one contains both the customer, the revenue, and raw material and cost of sales. Normally, if this document is based on the delivery documents, this raw material and cost of sales account will not be here. One will have appeared in delivery documents. I think you get me. Do you understand? Can we understand?
Not really, but maybe when I watch the video again.
I said, this invoice we are preparing now is not part of the invoice we prepared before. Everything we prepare, we base them on
This
on the
document.
we reference it to the base documents. But this one, because of the fact that I want to prepare AR credit notes, that's why I prepare fresh
This
AR
one is not part
invoice.
of what we are doing.
Yes. So because of the
Tell
fact
us
that
how we use credit notes.
you said,
You just tell us how we use credit notes. If customer will pay it.
Okay, yeah, exactly. Yes, I just want to effect that so that you see. Now, I now said because of the fact that this AR invoice is not based on the they are on the delivery notes, the journal entry is going to include delivery notes accounts like this raw material account, cost of sales accounts. Ordinarily,
That's like first class.
he said,
Yeah, just like first class that we did not have delivery notes.
yes, that's what I'm saying. Now, so that's it. Now, so let's now proceed. So we now copy these documents to AR credit notes. So we want to effect the return the customer make. Like I explained then, if we have not issued invoice to customer, we are not going to prepare credit notes. We are in that situation, we are going to just prepare a return document because invoice has not been included. We only prepare credit notes where invoice has been raised already. So that's why we are now preparing credit notes here now. So we assume that the customer returned two of the item out of 200, they returned two. So customer returned two, which is 360. Then we had, let me add view so that it won't go anywhere. So we had these documents. So if you check the journal entry, now it's going to be the reverse. Can you see?
Yes, sir.
So now instead of 36,000 36 GBP, we have 360 because the price, the cost of the two items will be valued. So they return two. So the journal entry will also affect only two items. That's why we're having this in negative of debit the cost to the customer, negative of credit to the revenue, the negative. So that's how it goes. Now, another scenario is that, I said something, maybe for instance, the customer did not complain of damage of goods. It's just that there is a discount that customers are supposed to enjoy, which we did not give. We did not consider when raising the invoice. So maybe instead of to charge the customer 360,000, 6,000, we now we charge the customer 36,000. Maybe we're supposed to charge the customer how much did we get then? That's 360, abi? Let's say okay. Now instead of to charge the customer 36,000, but because of the fact that the customer has percent discounts, so the money is not up to supposed to be 36. So we now want to like give a credit note to the customer that you are still having these also amounts with us. So like maybe in the subsequent sales, we are going to consider the money you are having with us. So your payment will be reduced by the credit notes you have with us. So now in that situation, now we are going to copy to credit notes documents. See the difference. So I want you to see the difference. You now go to this place. There is a place. See this place now. You put the quantity. Maybe let's say 2. We calculate how many of the quantity is supposed to be. I mean, how much the price is going to be. Okay, it's not quantity. We are not talking about quantity now. If you look at this place, can we all see it? This column where they write without quantity. Can we see it?
Yes, sir.
So we click on this without quantity, meaning that this credit note we are issuing is not going to consider quantity. It's only the price is going to consider. If you say we want to check the journal entry preview, let's check. You know, we have not added. Can you see that? If you notice, the first credit note we prepared, you were seeing raw material cost of sales. Do you get me? But in this case, we are not seeing raw material and cost of sales because we did not consider quantity here, stock here. It's only the reduction in amounts that we're supposed to give the customer, which we did not give. It's what we are giving the customer here. That's why the journal entry is giving us this. The journal entry is not showing, it's not including the stock and the cost of sales. That is credit note without quantity. That's the two scenarios we normally prepare credit notes. I think I will need to stop the class now. So if you have any question, you can ask before we end the class. Sorry, do you have any question? Hello, Madam Adewumi. Ma?
I don't have any question at the moment.
Okay. Hope you are fine with the way it goes. So, and I believe if you watch the video back, so you'll be able to get this.
Thank you so
So
much.
maybe in the subsequent class. So if you have any question, then or possibly maybe you drop it on the WhatsApp group, or maybe in the next class, any question you have, you can ask. So good to have you, and thank for your time. So we see in another class by the grace of God. So I want to end the class now.